Good morning, Dat. I'm so glad to be here with you today.
Happy to be here. Thanks for having me.
Yes, this is awesome. I'm so excited about this episode, like
Oh,
probably more
same.
excited than I've been for most of them because it kind of came about so organically. So I'm very excited to have you. I'm appreciative of the time. I know you're a CPA and this is the busiest time of year for you.
Yeah, for sure. Um,
So I will let you introduce yourself, but just by way of background, I'd love to sort of set the stage for you. I'm here today with Dot Lee, who is a CPA, who I actually went to high school with and college with, a little bit of an age difference, but we were there together and we reconnected a couple of years ago. You actually were extremely generous through the charitable efforts that we do through the company for some underprivileged students in the city of Boston. And I was blown away by that. We've sort of stayed in touch.
yeah.
And recently, you started your own company, which I'd love you to talk about. And somebody else on your team that I know had reached out to me on LinkedIn to let me know he moved there. And I was looking, and it was the same day that I had just a handful of conversations with our agents. We have close to 500 agents.
Oh, wow.
And I had a handful of conversations in passing, just assuming everyone must have these great
Yeah.
CPAs that really focus in real estate. And some people do, don't get me wrong. But I realized there's a need. There was a lot of questions, and I personally feel like I can never know enough. And I was in search of someone that I knew well and could like feel comfortable enough to just like bat around some ideas. And I feel like we had this tremendous organic conversation
Yeah.
about a podcast that actually led to maybe we should make an even deeper resource for people. So that is something we're going to be talking about at the end of this. But today we wanted to just kind of have that organic conversation that we
Yeah.
had together and be able to bat around some questions. I'm a novice at all of this, so we didn't prep too much. And I'm really excited to just ask you
Yeah.
some questions about what we should be looking out for as real estate professionals in
Yeah.
terms of taxes. And then we're going to do a second part on investors. So I
No.
just wanted to set the stage, but
Yeah.
before we get started, can you just introduce yourself, backtrack here and tell us a little bit about yourself?
No. Yeah. And appreciate the intro and happy to be on the call it the tax hot seat for for the Q&A here. But no, like you said, same high school, same college. Go Rams, right? And kind of just so always kind of stayed in touch. And when you were talking about I guess a need for a new CPA and me getting into the industry, uh, to, especially in the real estate side, there's not a lot of CPAs out there. I heard the other day that 75% of all tax preparing CPAs just became eligible for retirement this year. So the industry is going away. So there's not a lot of CPAs going to be left out there, and there's not a lot of CPAs, especially in the real estate space. So obviously, staying in touch with you, just excited to, I guess, broaden the knowledge or share some of the nuances to the industry. But like you said, I'm Dat Lee and based out of beautiful Las Vegas, Nevada, out here. And I work as partner at Motta Financial, and we're primarily a CPA firm, who specializes in tax planning and preparation for individuals, entrepreneurs, and businesses, especially concentrated in the real estate space. I personally have a handful of rental properties, and kind of always love the industry. So naturally, getting into taxes and accounting, super fun to kind of be able to apply it to the real estate industry as well. So excited to be on here, and I kind of just excited to catch up in general.
I know. Yeah,
Mm.
it is. It's a fun topic, oddly, because you wouldn't think taxes are, but I find it really interesting just to understand what are the ways, especially as entrepreneurs, obviously, people that are receiving 1099s,
Right.
what kind of questions should you be asking? So that's what we really want people to get out of this is what questions, what might you bring up with your CPA? And I
Yeah.
know we talked about, and we don't need to get too into it, but just some people are really, really conservative, and that's okay
Mhm.
too. What I really like about your approach is it seems like a really nice blend. You have a very hyper focus on real estate, a lot of experience with real estate, you're not
Right.
afraid to ask those questions, to dig a little bit deeper and not extremely conservative, so much so that you might cost a client.
Right.
It doesn't sound like we talked about some people that are just totally going a little too off the reservation, because you don't want to
Always.
go
Yeah.
nuts. But you have to know what the questions are that you can ask. So it's an interesting conversation. I'd love to get started. And before we get started,
For
just to
sure.
reiterate, we are going to talk first. This is a two-part episode. So the first part's going to be about primarily real estate agents, entrepreneurs that are receiving that 1099, that need to know kind of what questions they should be asking. The way we're going to structure it is talking first through some write-offs that you should be considering, then structuring your business, which I know a lot of people, especially at our company, may know that piece. They can skip over it, but just looking at whether you should be doing the S Corp, the LLC, things like that, and then strategies for planning for going forward. That's the three tiers we're going to follow today, for the first part, as well as the second part. So hopefully the second part, if this is something that a real estate agent is listening to right now, maybe something you want to share with a client, or perhaps you're an investor too, and there's other things you would like to be thinking about, just kind of in both realms. So to get started,
Yeah.
can I just ask you, what criteria must someone meet in order to qualify as a real estate professional for tax purposes before we even get
Yeah.
started?
Yeah. So the IRS definition of to become a a real estate professional is someone who spends more than half their time on real property and business activities, right? So that could be brokerage, leasing, buying, construction, development, all of that kind of stuff. Essentially, if you're involved in the real estate industry at all, and you spend more than half your time on it, and there are some kind of nuanced hours requirements there too, then you're considered a tax professional. As far as from a tax perspective.
A real estate professional. Yeah.
Yeah,
Yeah.
right.
And what are the primary advantages to that?
So I always say, and being being a CPA and also in the financial advising and wealth management world, you naturally get the question a lot. Well, what should I be investing my money in? And I guess just to disclaim, this is not investment in tax advice, but I always say, and me personally, I always say, if you're not putting your money into real estate, you could be doing it more efficiently, just because some of the tax savings that you can have from investing in real estate, and especially for, I guess, people in the real estate industry, that there are some super cool, I guess, tax advantages to, including like depreciation and some of the, I guess, the more high level and complex areas that we'll probably get into in the later episode. But the advantage is I guess, primarily, I guess, being in the industry and being heavily involved in it, you can take advantage of some of, I guess, the non-cash expenses and some of the nature of some of the expenses that are in the industry in general.
Awesome. Thank you. So I think we'll dive right in. Just if you could run us through a few easy write-offs, things that people should be looking out for. I know things that come to mind for me, obviously, car. I know people try to write off like clothes at times. I don't know how
Yeah.
crazy you want to get. I'm also
Yeah.
interested to hear about your take on children. I know
Yeah.
that people are using like their children for legitimate things, and there's a
Right.
lot of ways you can kind of funnel money to them as well.
Yeah.
So if we could walk through some of those just kind of common questions that people have.
For sure. Yeah, and we get those questions a lot, right? And there's a right way and a wrong way to do it, as with all things, right? But especially being a real estate agent or real estate professional in general, a lot of those things, definitely help, right? So I always say, and the first, I guess, an overarching point that I think real estate agents and or professionals should get in the mindset of is that they're running their own business. They're entrepreneurs, right? So in 2005, Jay-Z had a line on Kanye's late registration album that said, "I'm not a businessman, I'm a businessman," right? And what he's saying there is like, and I guess to translate it to being a real estate agent, you're not just either selling or leasing properties, right? You're running a real estate practice. So just understanding that the write-offs are not just in the discrete activity of or buying and selling properties, but that'll include like social media ads or the like your vehicles, or like you said earlier, or I guess some of those called discrete items that are called overhead expenses to running a business versus just like buying and selling real estate, right? So like you said, obviously vehicle expenses are the common ones. Close if they're necessary and reasonable and ordinary, right? So don't go too far with it. But obviously, as call it realtors, you're client facing, and so there is, I guess, some flexibility to that. But I guess overall, so when viewing yourself as a business, there's also items like depreciation, like we referenced earlier, which we'll kind of get more into. But also things like the qualified business deductions and things like that, where I guess entrepreneurs can take a certain percentage of their business income and I guess offset their or not count it on their or take a credit for it on their individual return, right? So just a lot of common things in the ones that you hear about, and but then also a few nuanced items that I think realtors can also kind of leverage as well.
Yeah. And what are the words necessary and what? Ordinary?
Ordinary and necessary, right? So, do, does a real estate agent need a car in order to, I guess, engage in their practice? Yes. Do they need a Ferrari? Maybe, right?
Right. They're selling $20 million
Yeah,
homes, right?
right,
So these are the conversations you want to be having. Just
right,
same with
exactly.
clothes. If you want to do like, I think it's called a uniform. Like if you're really trying to write off, okay, here's this big expense on shoes
Yeah,
or whatever it might be, it might sound crazy, but you're going to want to just think about the fact that if you do get questioned, if this does come up, that those two things are checked off. If you're someone that is, has a very high price point,
yeah.
very high worth client, and you're really doing those deals, you probably could say that they're, yeah.
Yeah, and that kind of goes into your earlier point of some clients being more conservative and some being more quote unquote risky, right? So, I think a lot of it will, or I guess my approach with clients, especially in this area, is just making sure they understand the rules. Like so great question with the two kind of criteria for write offs, but because there is a lot of gray area, and it is kind of a the stock consultant answer of it depends, right? So depending on your class of clients and what's ordinary and kind of necessary for that type of profession, there could be, I guess, an argument to be made for certain things, right? But I guess having my clients or the people understanding, I guess, rooted in those principles, they're able to make better decisions and kind of able to, I guess, take credit for the expenses they're already spending for their particular practice, right? So,
Mm-hmm. Sure. And then in terms of the children piece, will that come up more through the strategy at the
yeah,
end, or are there write-offs that you can be
no,
thinking about?
yeah. So we get this question a lot, and for if you think about real estate agents, right? I would say they're a B to C business, but in reality, kind of like a C to C business, right? Your people helping people will acquire real estate or a home, right? So for me, the IRS, obviously, there's a lot of people, as you can imagine, who try to take advantage of it, right? So, but there are a lot of benefits to hiring your children, right, as 1099 or even W-2 workers, just because it's a business expense. So it saves you on taxes, and then for them, as long as it's below a certain income threshold, it's essentially tax free, right? As long as it's under the standard deduction. Uh,
Which is
that
what is that, not to put you on the spot? Is that around 12 grand?
12,950 last time I checked, but I think it's
Yeah.
around there. It goes up a little bit every year, but yeah, somewhere a little under $13,000 for a child, I believe. But tax hot seat, I was ready.
Yeah, I know. Yeah,
But
that's incredible. Yeah, so that's something that I think a lot of people ask about. And
right,
an example of that, again, it's not something that you're trying to pull a fast one. It's a lot of people do send, photos out, postcards in their
for sure.
community, with it might have their children on it, or there's just different things that you can and may do,
Right,
in that regard, especially with social media. A
for
lot of
sure.
times people are trying to convey just like their lifestyle, or, the community pieces where it really comes in. So
Yeah.
Something
Yeah.
to think about.
We live in, I guess, a new world here, right? Where social media is, I guess, a main platform for marketing and advertising, right? And kind of using that as a platform to communicate to your clients and especially in the real estate industry, right? I believe it's a good way to kind of humanize yourself to your clients, right? Showing them like, hey, I'm a normal person, and building that genuine connection or humanizing yourself to your clients is a super valuable tool in the industry specifically. So the IRS will say, like, if you're hiring your child, they should be serving a specific business purpose, right? So you can't hire a 7-year-old to, I guess, operate a forklift, right? Depending on the situation, I guess, but not recommended. But for like real estate agents, right? Posting pictures of their family, like you said, helps with community engagement and all of that stuff. So it's super justifiable, and obviously from a tax standpoint, will help you lower that tax number and kind of be able to provide, call it, savings for the child. So win-win for everybody.
Awesome. I love that. We will dive into this all deeper at a later date.
Yeah.
We're going to kind of put something out, but this is just the structure we're firing through right now. So I'm going to keep us on track here and get through
Much
to
needed from me.
the structure. Just how to structure your business from a tax standpoint. If you're a real estate agent, obviously a lot of people use LLCs. I know a lot of people use S corps. If you could just walk us through high level, what does that even mean, and like
Yeah.
what the differences between those two
Yeah.
things, from a tax standpoint, that would be really great.
For sure. And for real estate professionals and realtors, generally 1099s or even rental properties, I guess putting them in a legal entity is super important, just from a cost tracking perspective, but then also from a segregation of assets and legal protection standpoint. So highly recommended either way, but then that kind of leads to the next question, is like, okay, which one, right? And again, stock answer is always, it depends. But typically it kind of really is based on two things, right? So profitability of the business, and profitability meaning, like, if call it in the case of a real estate agent, the 1099 income net of all the expenses and write-offs that we talked about previously, right? So depending on how profitable they are, it's either going to be an LLC or an LLC taxed as an S corp, right? So an LLC is a legal entity, and an S corp is essentially like a tax designation, right? So it's a little nuanced there. Nothing, I guess, too important to understand. But essentially the kind of which one is better for me basically depends on a certain income threshold, which varies based on person. But I'll say if you're profitable, around like the $100,000 to $200,000 range, probably makes sense to move to an S corp. And the only reason for that is to save on self-employment taxes, right? So as an LLC, essentially all of the net income is paid out as the business income, whereas if you're an S corp, the owners are allowed to pay themselves a salary. So in the context of self-employment tax, which is where a lot of this really is the differentiating factor, is, so for the LLC example, say you had $100,000 of net profit, right? So that is subject to self-employment tax, which is around 15.3%. And for any kind of 1099 or even W-2 earner, that's kind of like the FICA tax, like the Medicare and that 7.5 you generally see on your tax or on your pay stub. If you're self-employed, you're responsible for both sides of that, the employer and the employee side, right? So that's what's subject to the entire 15.3. So that's on the LLC side. So the entire $100,000 will be subject to the 15.3% self-employment tax. Whereas if you move it to an S corp, same profit, right? Around $100,000, and you pay yourself a salary, say $50, the self-employment tax is only being paid on the $50,000, and then the rest of the net income is paid out in a distribution, so not subject to that, call it that 15.3%. So that might have gone a little too technical,
No,
right?
I think that's really helpful.
Yeah.
I've heard it before, obviously, but I think that it would make sense to anyone listening. Basically, if you don't want to be paying twice, you don't want to be
Right.
paying as on the receiving end and the issuing out. And if you
Yeah.
an S corp, you can pay yourself a salary less than that
Right.
whole revenue that you're generating.
Uh,
So I think it's a smart thing to look into.
mm,
And can
mm.
you give
No,
any insight as someone that might be listening to this and being like, maybe I should do that? Is that something that's hard to go through? Is that something, obviously, like, can they do it for last year? Probably not. Can you give people some insight on that?
yeah, and in the vein of like these are some of the questions that you should be asking your accountant, right? When you talk to them at year end, I would say because it depends on the income threshold, right? And for me, um, uh, I for our clients, as we're kind of doing the return, well, we're always kind of taking that next step and being like, okay, seems like that their tax number seems a little high. You know, maybe they should be moving to an S corp, right? But if if that's not happening, then just strongly encouraging real estate agents to I guess ask those questions with their accountant. But kind of just depends on call it income and profitability, right? And so that'll just vary by the person. But I think their CPA should be a good resource on that front.
Perfect. That's awesome. So the last piece for this first part would be just strategies. So like that,
Yeah,
right? So there's things that we're talking about today, right now, that you might say, I wish I did that last year. That's okay if you didn't. But now we're looking forward and saying
yeah,
what are the strategies that people could use to, let's just give, like, 2 to 3 things that you should be thinking about for next year or moving forward for your business, especially if you're someone, the person that I'm thinking of, like kind of the avatar for this episode, is less likely someone that's been in the business for a long time and has
mm,
this all down. It's someone that maybe is just getting momentum, just
right,
starting to hit those numbers that it really is going to make a difference. They need to get this up and running. And I feel like this is something that always ends up on your list and then kicked out.
yeah,
And
always,
right now, it's funny. Last year, this time, I thought about this, but it's so hard to like get somebody in tax to talk to you at this time. So it's really
yeah,
interesting because it's front of mind when you're looking at your
yeah,
tax for this year. What should I do next year to help out with,
yeah.
like, to change this? So that it's just a good time to talk about the strategy. So can you give me a couple examples of things that they can do to strategize?
Yeah, and you know, I would say what you laid out here for your situation is like 99.9% of people out there, right? You know, they only think about their CPAs, you know, called in the spring, right? So for me, it's and rightfully so. Who wants to think about taxes unless they have to, right?
Right.
You know, but for us, it's kind of communication, right? You know, it all kind of boils down to that and then kind of being proactive about it. I know I said it earlier, but you know, real estate agents or even people getting started in the business, you know, again, getting into the mindset of you're an entrepreneur, like you're running your own practice, right? So for me, I tell people whether real estate or not, to people I mentor and students and stuff. It's like if you're going to be self-employed, you need your own personal advisory board, right? You need a CPA, you need an advisor, you need lawyers. Hopefully not too many, but you know, generally necessary, and even like executive coaches, right? You need a panel of resources to kind of go to for kind of big decisions and purchases, right? And it's never too early to start, right? Even if you're just getting out in the business. So for me, it's communicating and making sure you are talking to that panel in the context of CPA is just saying it's like, hey, I'm planning to buy a house this year. I'm planning to make this much income. What are some things that I can be doing based on that rough income number and what I have for assets where I can be doing things to save, because that's the thing. Like you know, I would say a lot of the clients we get will come to me in, you know, late March, early April, and it's like, here's all my tax stuff. Like, where can you find me savings? And then I explained to them that 2023 was months ago, man. So, you know,
Right.
and there's a lot of things that we could have done, but to your point, but for me, it's just kind of making sure you're kind of using your resources and communicating and to kind of deploy some of those strategies. But a lot of what we see is people who go to their accountants for the tax preparation piece, but not the tax planning piece, right? You know, just getting their taxes done and not kind of like asking where could I have done better and kind of like making sure that they're the following year that they're kind of implementing that into their operations, right? So that I would say just being proactive and kind of communicating with their service professionals, really.
Yeah, and this is just food for thought, not something we talked about, but you can basically audit someone's return for a couple of
Yeah,
years, right? So that's
for
something
sure.
I didn't know until a couple of years ago. If you have a CPA right now, so say you're listening to this and you're like, shoot,
Yeah.
I haven't really been, maybe you've just been doing your own or whatever it might
Yeah.
be. You can audit those returns. Someone can take a look at those for you. They can look back and help you if you want to walk
Yeah.
people through that.
Yeah, we actually just wrapped a couple up this week, and because we're a new firm and have a lot of new clients, a lot of what we do is that exact process you talked about. It's like if you're happy with your accountant, we never want to step on any toes or kind of insert ourselves into any kind of relationship because it is a very intimate topic, right? But for us, just knowing all of the I guess the rules and the nuances where people might not just would known about them before. We essentially can go back depending on your situation at least 2 years, right? And then kind of as long as you can kind of maintain those same records, we can always file an amendment return if it's worth it, but always as long as you're maintaining records, keeping receipts and things like that, an accountant can go in and call it recalculate based on call it the correct view of it or things like that. So exactly like you said, we'll do that. I guess a few times a week of just like seeing other accounts returns and then essentially seeing where we could have done things differently or some things that they may have not been aware of. But I know you can go at least 2 years back, so I know from a personal standpoint, like some of my close friends and even my brother, looking at his returns, we just did a handful of things like different, right? And he went from owing a couple $1,000s to even getting a refund back. So some even small tweaks like that can make a pretty big difference.
Yeah, that's awesome. So one more question, doubling back. I know I said on the children
Yeah.
front. I also know that there's ways you can pay family members, like you can pay parents, you can put, I think you can use IRAs, you can do things like that,
Hmm.
sort of pre-tax. Can you walk us through just a couple high level tips to round us out for this
Yeah.
episode? I think a lot of people are interested in that stuff, and it gets a little bit like, should I not do that? Is that dicey? Is it scary? And like, maybe you think it is, but I think the
Yeah.
it's good. And I think that those numbers, it can add up. I know
Yeah,
like grandparents can put things into college funds. There's
for
just a lot
sure.
of options for shielding that income.
Yeah, and we obviously get that question a lot as well. And when it's done right, and you understand kind of like the rules and the can and can'ts, obviously important piece to it, which what we can get into in more detail, obviously. But for me, as long as they can be adding value to your business and you can establish that from a principal standpoint, right? The from a tax benefit standpoint, once and that can depend on profession and the capabilities of the family member, right? So, but if you can establish that and they can serve a functioning role in your business, which I'm sure is a pretty, I guess, easy kind of way to fit them in, right? Like you said, from a retirement or even a benefit standpoint, it just helps tremendously from call it turning money that you're already spending into a tax deduction, probably, right? So,
Yeah.
and just to take a step back, one of the misnomers of tax in general, I think people feel as though you need to spend $1 to save 20 cents, right? And I think that's not the correct way to view it because your net minus 80 cents. I don't think that's a great deal. For me, it's maintaining records, right? And a CPA will always tell you that just as long as there's receipts and documentation, we can work with it. But for me, it's getting credit for, it's not, to summarize, it's not spending $1 to save 20 cents. It's saving 20 cents on the dollar that you've already spent, right? So,
Right. Right.
so as it relates to family members and even for in their circumstances, it's like you said, there's tons of avenues as far as retirement planning benefits X, Y, and Z, but that you can point towards for tax savings. But at the end of the day, it essentially is just being the most efficient as you can with your company resources, right? And if you can benefit the family from doing so as well, I just think you create a win-win.
I think this should be really helpful. Like I said at the beginning, I think this is something that's great, at least a conversation starter for people specifically who might just be getting momentum in the business and they're just thinking, what questions should I be asking?
Yeah.
Who should I be using for a CPA? So thank you so
Yeah.
much for being here today to walk through that. If you are a real estate professional, if you have more questions for us, you can reach out directly to me and I can put you in touch with Dat. And otherwise, we're going to probably be doing something a little bit more robust that you can dive into and get some of these, this information a little bit
Yeah.
more in depth. We like to do these short and sweet.
Yeah.
And that's what we did today. So we just touched on those topics and more to come, but thank you so much for being here.
Of course, yeah, and looking forward to the next episode as well. For me, like these are just general and high level things. Obviously, we didn't have time to get too much in depth, but it'll be fun on the next episode to kind of really dive into some pretty cool tax strategies, especially in this space. So no, looking forward to that.